Trading at the Philippine Stock Exchange officially gets underway. The PSE index kicking off from 66.13 after underperforming on Monday ahead of a key central bank policy meet where up until last week, a first rate cut was all too certain. And now analysts are saying, nah, maybe not. It's still a toss-up. Joining us for more in the markets, Gabryle Aguila, head of research at Unicapital Securities. Gabryle, good morning. Thank you so much for joining us.
Hi, good morning. Happy to be here.
Gabryle, we're 2 minutes into trade, and so far, so good. We're still in the green. The index is up by 6 points, less than a tenth of 1%, 66.19. Most sub-indices are in positive territory, except for two, financials and property, rate-sensitive categories. I guess this is all in preparation for the BSP policy meeting happening this Thursday. What do you think? You know, it's now a toss-up, they say. Will it or won't it cut rates? The Banco Central, I mean. And when it doesn't deliver a rate cut, do you think this market is just going to throw a bad tantrum?
Now, so far, as we can see right now, especially coming into yesterday, as you've mentioned, we did go down to 6,600 points, well, to test that support level. So far, right now, we can see the index to be just a little bit flat. You're right about the finance and the property sectors being interest rate sensitive. And we can see a little bit of that uncertainty with the investors right now. Will there be a rate cut this week or not? That's up in the air. We're seeing signals from the BSP saying that there might not be. However, our finance chief is also looking at the possibility of still continuing with the 50 basis point rate cuts. If we look at the August inflation figures went up to July inflation figures going up to 4.4%. With the adjustment to the base being at 4.1%, as mentioned by Governor Rebolona. It is an uptick, but if we look at last year, that was still one of the lower figures of inflation over the past 12 months. So there is a little bit of base effect. Whether that will merit a pause in rate cuts or the rate cut schedule that they've said to be this August will remain to be seen this week. For now, I think investors are looking at both possibilities.
Okay, so you're not expecting any tantrums, any wild swings, breakdowns, meltdowns by the market if that rate cut does not happen this Thursday?
Right. Well, when you look at it, the prospect of rate cuts moving forward into the fourth quarter, our view, it's still imminent to be in the fourth quarter. Right now, we see U.S. Fed to be cutting in September. So that may be the next window where the Philippines would wait for the August figures of inflation to see whether the next rate cut would be warranted. Now, in terms of market tantrum, not really, because again, net positive moving forward. Our first concern before was that an August rate cut by the BSP ahead of a September rate cut by the U.S. Fed would affect the FX rate. Now we've seen the FX be doing favorable, going down to 57 levels. So that type of downside, where we were looking at the risk of currency depreciation or currency weakness, is not as apparent as what we're seeing now. So moving forward, we're seeing our support levels to be quite good. Should hold well.
Okay, should hold well. Aside from the BSP, also happening in the other side of the world, you've got U.S. CPI due out on Wednesday, followed by PPI and some retail earnings numbers. Are you expecting those numbers to move the needle here, or are we going to be focusing more on domestic catalysts for this week at least?
Well, to a certain extent, it will have an effect. We are looking at the US CPI to confirm or validate whether the likelihood of a September rate cut by the US Fed will be there. And I think that's one of the most influencing factor when we look at the Philippines timing, because we're very much looking into our currency strength. We're very much looking into the interest rate differential. So what we are looking optimistically for is a good scenario where if we do not cut rates by this week, we would cut rates soon after the U.S. Fed or with the U.S. Fed, and that would arrest a lot of the FX weakness prospects or any of the interest rate differential prospects moving forward.
Wow, Gabryle, you're sounding pretty bullish. You're sounding pretty upbeat about the market, seeing this as a glass half full.
Well, if we look at it moving forward, there is still some uncertainty in timing. But in terms of where we are in the horizon, the easing policy rates are still there, whether it be in the fourth quarter or in the first quarter of next year. And that is a catalyst that we've been looking at for the past 24 months already. So if you look at it from that perspective, right now, it's more of when will it be rather than will there be one or will there be.
All right. Speaking of domestic catalysts, everybody was waiting for this in the last couple of days. The MSCI rebalancing news is out. The Philippines country weight is seeing a decrease, very minimal, 0.009%. No change in the MSCI Philippines Standard Index, but for the Philippine Small Cap Index, Plus or DigiPlus is getting added while Security Bank is getting booted out. Looking at some of the top weight increases, BPI, BDO Ayala Corporation, top weight decrease, Ayala Land and URC. Well, for the small cap index, top increase will be GT Cap, ASCEND, Century Pacific, and top weight decrease will be Bloomberry, Converge ICT, and Robinson's Land. Again, Security Bank is getting booted out. DigiPlus Interactive getting added to the MSCI Small Cap Index. Are you expecting any big moves because of this news we have this morning?
Well, if we look at it, one big addition to that is Plus, as we can see now being added to the index. This is vis-a-vis the downweight in Bloomberry, which you've just also mentioned. I think this currently encapsulates where gaming trends are moving here for the Philippines right now. While traditional gaming will still have its place, with the growth that Pagcor was seeing right now, as we saw it in their first half figures, will be in the digital space.
All right. And it's not really a surprise that DigiPlus is getting in, considering it was, I think, number 1 or number 2 top performer in the stock market last year. It's gone up so much. So I think everybody's saying it's about time, right?
Yeah, that company, I think, in our view, has been able to fundamentally back its stock price. So the positivity in that growth, which is driven by a very culturally relevant game, is what is driving it from the digital space into the Filipino homes, as we can see it so far.
And I was looking at least this is not updated, but this is based on the performance of stocks for the first half of the year. Start of the year all the way until July 26 of this year. It really shows you a divergence of how gaming names have performed. DigiPlus continues to outperform. It's almost every analyst's favorite darling stock these days, even though it's looking toppish when you look at the stock price. It was a top performing stock last year. And Bloomberry, I was surprised now that it's actually one of the biggest laggards, worst performing stocks year to date so far. So it really shows you the trend where gaming is going. Finally, before we get to your blind item, the risk reward. What's the risk reward like for stocks today, given uncertainty over the rate cuts, at least for the timing, the sort of earnings that you saw for the second quarter of this year, the macroeconomic picture? What's the risk reward looking like for owning stocks?
Okay, if we look at the risks first, currently we think the downside risk has been limited over the past 2 years of performance, or even the past year. Like if we look at their year-to-date low, we went down as low as 6,150. We didn't even touch 6,000 during the downturn over the past 8 weeks. And that's because, first of all, we're trading at a very cheap PE level already. I think we're ranging between 10.3 times to 10.7 times 12-month forward PE. And we look over our average over the past 10 years, that is about 20 times, 18 to 20 times. Also, moving forward, the risks right now is more of the timing. When will property segment be able to benefit from the rate cuts? When will the banking segment have challenges with its net interest margins moving forward? But that timing is already narrowing as we're looking forward. Again, in our view, fourth quarter is imminent for the rate cuts. So in terms of that, the downside is limited. And when you look at the upside, our market's been discounted quite a lot for over the past 12 months. So we're still seeing a lot of wide discounts to fair values or target prices ranging between 20% to 30%, and in some cases for some of our conglomerates up to 40 to 45%. So right now the rewards are starting to shape up, but whether we'll get it in the next year immediately will be up to how the economy runs moving forward. It will be a mode of sequential growth moving forward.
All right. I think we are now ready for your blind item. Talk to us about the stock that you're monitoring closely and that you like. Don't tell us, just describe and leave our viewers to guess what this is. What do you have for us today?
All right, so will there be a rate cut this week or there won't be? Either way, again, in our view, rate cuts are imminent in fourth quarter, and our stock here is of the property sector, which will be a direct beneficiary of the easing policy rates in the horizon. In the first half of 2024, it's back to pre-pandemic levels on the revenue side, driven by growth in its residential segment and improved inventory, with reservation sales up 70%. We particularly like its recent disclosure that seeks to focus on the development of its sizable land bank, and optimistic on the ability to unlock the value and being a premier developer and its strong brand equity. We currently have a target price of 40 pesos per share for the stock and an upside of 33% from yesterday's close.
33% over what time period?
12-month forward.
12 months forward. All right, we're just going to have to guess which stock this is. Gabriel, always good to see you. Thank you so much for joining us. See you soon.
All right, thanks.